If everybody's doing it, do you really want to be as well? In today's video, we take a look at the biggest moves in the markets over the last couple of weeks and why we've suspected that positive gamma and options flow would be pushing higher. Are we about to reach the top? M2 money supply is continuing to go up, and of course, rotation is happening from Wall Street. But what we just saw in the jobs numbers may surprise you. And in today's video, it means there could be new opportunities just around the corner. Well, welcome back, everybody, to what was another sea of green as we saw the passing of the big, beautiful bill, and pretty much now that is set in stone. On top of all of this, we also got the jobs numbers. My name's Tom, and in today's video, we'll be covering off the latest macro, the big data, and of course, the key flows. But let's start with things to do with the jobs numbers because, of course, they look pretty good on the surface, and everybody started to expect maybe less rate cuts. 147,000 jobs were added, and on the surface, it looks pretty good. 110K expected. Unemployment fell, actually, and of course, you might think, wow, this was pretty good, until you look at the private sector growth. 74,000 jobs added from the private sector, and somehow government, 73,000, mostly state and local education jobs. Manufacturing also down 7K for the second straight monthly loss, and labor force participation actually dropped across the board. So what exactly is going on? Well, we always look at the revisions, and usually they've been negative now for like 12 months. You guys know we call it fake jobs numbers because oftentimes they'll come out with a big number, it'll get revised down 30,000, and then it just goes to be exactly what was expected. Well, this time we actually saw a little bit of gains, net 16K in terms of revisions. But again, I would expect a drop in jobs numbers once we see this month's revision. I wouldn't be surprised at all to see that drop. Regardless of all of this, the markets continued their movement up higher. And you know why it is. It's because it is the wall of worry. Recently, we talked about a couple of the big signs for bull markets. One of those is bad news gets bought, not sold, and obviously new highs with lower volatility. Well, we're also seeing a breakout here of one of our favorite reads, and you can see Grant Hawkridge here has made a pretty good chart of the advanced decline line. Have we got an all-time high at all-time highs? The answer is quite simply yes. Is this a good sign? Yes, it generally is considered quite good. It basically shows breadth and the rest of the market is all picking up. And in recent days, what we've seen is small caps and also medium caps start to come along with some pretty good strength. We also do know that the NAAIM number is starting to approach back to 100, which sometimes can be considered a point of, contention in markets. The last time we saw this, funnily enough, was back in 2024 and the end of 2024. Now, why is this so important? Well, we saw a sell-off here, which was the sell, of course, of semiconductors. And we also saw the sell-off over here, which ended up being realistically more in February. This is an early indicator, but when that NAAIM number ends up coming up above 100, then you want to start saying, well, let's pump the brakes on being an absolute aggressive FOMO kind of person and start saying, well, maybe there is a little bit of risk and potential for a pullback on the horizon. Remember, Q3 notoriously is some form of bear at some point. And the reason is quite simple. July is strong at the first half and kind of weaker at the second half. You can see here the stats for different months of the year and how kind of July actually plays out. And you'll notice that the first kind of bit of time, not bad. Second half, not so good. And then you usually get some form of problem happening between August, September, and October. They are the classic months to see bearish markets. September is basically the worst month of the year if you're looking at it from a pure stat. Some further good news, though, has to do with, of course, some of the gains. The way this market has rallied up really only has two other times. According to Optima's latest data, we've only seen this during the late or 1990s and kind of the early 1980s, 1982 and 1999. Sound familiar? We've talked a lot about this one. Of course, we've been discussing the idea that this boom right now is the AI boom. Of course, what is this boom? It is the beginning of the internet. So are we going into another .com style bubble? We've got the same level of concentration in stocks, which if you're first time here, you may not have seen these charts before. Make sure to subscribe so you get these charts. 37% of the S&P 500 is made up of 10 stocks. That is exactly what happened over here. And we're also getting a very bullish market where nobody now believes that markets can ever sell off again. Now, it's not that they can't sell off 10, 15, 20%. It's people don't believe that any crash will ever occur. And we recently did a survey and asked you guys whether you were, thinking a recession would happen. And less than 50% now believe that. Now, if I took this kind of read only a few months ago, I believe it was about 70% of you thought there was a recession coming. So it just shows you how fast sentiment is shifting in this market. And more importantly, that we have a lot of similarities of the way this is bull bought back up with that 1999 style hysteria. Have a look here at the S&P 500 advanced decline line, 400 and 600, and you'll notice that there is a clear discrepancy here. Everything to do with the top kind of bigger stocks looks pretty good. We're actually seeing an acceleration now of the S&P 400. But when you take a look at the S&P 600, yeah, it's not the same. It doesn't look anywhere near as strong. But even that started to see a breakout. And what that's telling us is that if we do continue to drive higher in the future, there's a decent chance that the small and mid caps may be the next sector to actually break up and around. Some other bullish signals coming. Golden Cross, we've already discussed this. Golden Cross is notoriously one of those signals that most people look for as a kind of bullish sign. Is it that good? Not really. By the time a Golden Cross often does come through, it's actually getting closer to the end. And remember that 1999 read again? Yeah, what did we see at the same period? Of course, a Golden Cross as markets took it out new to all-time highs. The McClellan Summation Index also on the rise. Again, not at that overbought statistic just yet. But we've also got quite a lot of other reads in terms of why we would expect the markets to go up right now. And we did talk about this during the month of June. We thought we would get some form of pullback or pit, which is a pullback in time, where basically markets go sideways for a bit. And then near the end of June, we would see a breakout that really was bought up by mostly institutions. Now, funnily enough, we saw institutions purchasing. Why? They freaked out. They're super behind on the overall buy of this V-shaped rally so far. And we do know that they started to buy tech out of control as this market broke out just, 2 weeks ago. Since then, we've put on like 5% onto the S&P, maybe more. And we're currently squeezing out the shorts as the markets continue to go towards positive gamma. But there is that really important trend line that we had at the start of today's video, a level where we not only have a call wall, which is an options level that basically the market is going to find very difficult to get through, but we've also got one of the best technical analysis reads that we've seen some time on the high end. And one of the reasons that we're thinking this as well has to do with similarities. When you take a look at any of these quick recoveries, these V-shaped, massive gain, very quick markets, third fastest, by the way, in terms of recorded ever in history with this one. So certainly a pretty FOMO-licious type of market. We do tend to see a slowing. And that happens somewhere around that 100 to 125 days of the market kind of finding that V-shaped recovery. Now, where are we right now? Well, we're getting and approaching that 100-day kind of run here from the bottom to the upside. So whenever you get these fast rallies, eventually you're going to generally see some form of dip, and that actually allows Wall Street to continue to buy. Now, what could be the reasoning? Well, there are many things. It could be tariffs. It could be the new earnings season coming up. It could be anything else. And this actually makes sense when we look at all of these seasonal reads. Again, what has the market done since we've even talked about this one? It's on the up. It's starting to hit into those closed trend lines, 6,300, 6,320 zone, some pretty key levels. Now, will we go into chop? Well, this is pretty much what we expected in 2025. If you have two damn good years, which we certainly did, 20% plus gains, year 3, it is up, down, and all around. And you may notice that when you approach halfway plus throughout the year, you often do start to see some sidewaysing and declining markets. And that's not to say go panic and freak out and run away and everything like that. In fact, most of the reads that we have at the moment still suggest that the markets may be able to hold on to 2026. But we've got to remember we're in what we call a kangaroo or sideways style market. So it's very difficult to continuously just think, wow, things are going to rally to the middle of nowhere, because that's just not historically what's happened in years such as this. And we still do have headwinds, even with the big, beautiful bill potentially being a bit of a nice thing for some of the corporations out there, at least in terms of a sugar rush. Technology, top bull market hit rates. Remember, when tech is leading, good things are generally happening. That has been the exact philosophy we've shown, and you guys have been watching the whole way up here. Tech, semiconductors led the beginning of this recovery, and they have continued to do quite nicely throughout. We also saw hypergrowths and, of course, meme stocks doing the same thing. And as you can see here, when Ryan Detrick brought out the data here from June and May, 2 bullish months usually equals a bullish rest of the year. So you can't really deny that the stats are there for markets to continue to recover. In other market news, really at the moment, the main thing is about crypto. Everyone's bullish crypto, except for, it seems like, Ethereum traders who have been shorting the rubbish out of it. Now, we did just see a break to the upside. And as you guys know, the big thing here in the crypto markets is deregulation. Being able to borrow against crypto and buy a house, doing all of these types of things. This is exactly what you would expect to see at the beginning of kind of the late cycle of a bigger bullish run. We actually do have a sale right now over at fxevolution.com, by the way, for our advanced course, which goes through this. We actually already knew this deregulation would happen on crypto because it is common to cycle style platforms and what actually ends up happening. So if you're interested in finding out more about that, finding out more about how we kind of went through gold, silver, or any of those types of things, look at the links in the description down below. It's always awesome to have new members, and you guys will be absolutely blown away. So definitely check it out if you're interested. Now, in terms of key event risks, we just saw the payrolls number, and you'll notice that that did move the markets, but not that much really, because basically if we kind of do what it always has happened, which is mostly revision downs, we get to around this normal number. Now, of course, we have here the big, beautiful bill that's coming through. And of course, that will continue to be a bit of a storyline that hits the markets. But we do have these potential implementations coming up next week of tariffs on EU imports and the 90-day tariffs. Now, a lot of you guys believe that this may be a huge, reason for the markets to sell off. It certainly could be. And I certainly will be paying attention to it. And it's just one of those reasons. 15th of July as well brings us the new CPI number. And the markets may have just started pricing in some reinflation because I started to see those types of sectors move over the last 24 hours. Let's now have a look at the S&P 500. The main trend line that most people are going to be looking at here has to do with, of course, previous highs. And what you're looking at is these two previous peak levels, guys. This is the one that I think probably matters the most at this stage. And you're extrapolating it out to see a number that hits at around 6,300 to 6,320. Now, why is this so important? Well, it comes back to options. And you're going to notice when you look at all options walls right now, 6,300 is a huge zone. Now, this market has been going up and up and up and up and up ever since we discussed that idea of the breakout of the pit. And boy, oh boy, has it been doing very nicely. But it's also starting to complete some other things. Let's go over to the futures market just to give a bit of an idea. And what we'll do is we'll take the low to the high and we'll consider this some form of flag breakout. Now, a lot of people consider flags as very good patterns to kind of figure out where you're going to. And some people take it from the low. You should usually take it from the break point, which is around here. And what that will do is it'll extrapolate and hit, as you may have seen, the trend line. So why is this important? Well, I call it proofing by TA. And whenever you can proof something with TA, it generally means that there is a stronger reason it may want to go there. Now, I would say that quite a few people see this. So are we in the danger zone? Yeah, we're pretty much in the danger zone. We're certainly overbought. We've rallied the whole way. We're starting to get reads that tell us this market's a little bit overbought. Very difficult without price action to say, oh, I predict this market's going to sell or anything. But certainly it's one of those points where people are starting to feel a lot of FOMO for missing out on what has been an excellent rally so far. Hopefully a lot of you guys have been buying in, even if you just bought the other day at 60.60. Still an extremely good run on these markets. So we're getting very close to the pointy end. What are you guys doing right now? Are you concerned? Are you holding a bit of cash? Are you descaling? Or do you think this thing's just running to the moon and it will not sell off? Let us know in the comments below. Here are the updates of the options low and high levels when we're looking at the Monday session. Obviously, a happy 4th of July, I guess, for you guys in the US. For Canada, I assume you had the July 1st, I think it is, public holiday. So hopefully you had a good time with your family and friends. And yeah, because it's a long weekend, we often go in green. Sometimes we come off with a little bit of a hangover, if you know what I'm saying. So markets could be moving a little bit next week on the words of tariffs. And I would say that means watch the tweets or watch the truths or whatever we call them out there now. S&P 500, 6,300 is the key, guys. This is the major call wall, and you can see it just everywhere. Doesn't matter whether it's the 7th of July, doesn't matter whether it's the 8th, 6,300, 6,320 just so happens to be exactly where that trend line kind of tops out as well. These are levels that will matter. Now, the market's in positive gamma, so that basically means that it's been pushing higher. But look at the amount of options here. It's actually quite a high amount for a 0 DTE option. So that's normally not that big. So you can see here a lot of people getting bullish, put call ratio, etc., starting to rally up there. Tesla also moving in the positive direction a little bit more. So if you bought 300, well done to you. That was that put wall level. Elon stopping the tweets for a few days there. So if that restarts, expect Tesla to be quite volatile. But of course, 330 plus is the level that most bulls will be aiming for. Then 350, then 380, which we've talked a lot about on the channel. And in terms of Nvidia, it keeps climbing higher. So 160 is the next major call wall. Quite a lot of options on that. And for now, most of the street has about 175 to 250 for Nvidia in terms of their target. So that's kind of the levels that I guess a lot of people are going to be looking at. Let's check out yields. US 10-year yield spiked up on the stronger jobs reports. So as you can see here, the kind of expectation of maybe rate cuts dropped a little bit. Reinflation, could we be seeing that? Take a look here at the 2-year. Pretty big moves there. And as we often say, you should also look at put call ratio when you're starting to get this high. So we're back down at kind of testing this 0.6. And it's not as easy to read the call overbought area as it is to read the put area. When fear hits the street, we often just see people absolutely go wild on puts. And of course, at the moment, we're seeing more calls. And that's why we're down at this 0.6 ratio. So when we get down here and we sit here for a little bit and we hit technicals, it's always a sign that I go, okay, maybe you want to be thinking about, I don't know, maybe a little bit of take profiting, maybe a little bit of descaling. Obviously, you've got to make your own decisions, but it does make sense when you look at those ratios. In terms of the options market, as we've been repeating almost every day, the options market doesn't seem to care. So that's to do with bonds, and it's just like there's literally no risk according to them. So the risk is declining and not going up. And of course, that means that usually markets continue to troll higher for the time being, climbing the wall of worry. When it comes to the US dollar, this was certainly a hit. 96 got hit. If you bought off the low, well done to you. We thought 96, 95.50 was a key level. For me, to be really bullish on the dollar again, I'm going to need to see it break this high, because at the moment it's got a high, a low, got the lower low. We do not have a higher high. I'd like to at least see that come out of the markets, but certainly did hit a key level. Trend is still down. Just remember that. But 96, 95.50, certainly where the bulls could come back in. And that's been helping a little bit here with gold. As the dollar stabilizes, we're seeing gold break to the upside, and hopefully gold can actually push past that 33.50 plus again, 33.60 again, and really start to rally higher, because it's doing pretty well. And hopefully we can start to get an all-time high. I want 3,600 more than most of you guys probably do, but I also want 4K. Why can't we have 4K? We'll put 4K out there nowadays. Look, ultimately, you guys know that I thought that gold would, hit some big numbers by October of this year. It's already surpassed most of my expectations over, and that was 2 years ago, so it's been a while. But it's already surpassed most of my expectations, but I would like to see gold start to trundle higher. It's been sitting for a while. This is really typical of what gold does. Big move, sit around doing nothing, big move. And at the moment, central banks are still buying it. Speaking of bigger moves, we've got here a pretty good day trading masterclass set up from one of my courses, which is silver. It's already up 2.5 to 1. Very replicable here in the bull side so far. Let's hope it gets out of the pit, though, which is the pullback in time. So this is a very, very interesting sideways area for silver. It's really in the middle of nowhere. And of course, I would like to see silver hit 42.43 in the near future. And what a beautiful close we got. So this is really, I want to see this thing absolutely start flying higher. A lot of dojis. So this means that it's really not sure about which way it wants to move, but the trend comes in bullish. And as I always say, that if the trend comes in bullish on enough time frames, why would I not be going in the direction of the flow? And it's the same thing with the markets. Generally you want to be optimistic more than pessimistic if you can be on markets. They are geared towards the bullish side. US oil sitting around, did bounce above, still not really clear on that, so we'll update when we get further info. And Tesla bounced off 300, now sitting in what I would call the most neutral zone it could be, between 330 and 300, so right smack bang in the middle, and we'll see how that goes. Nvidia, good weekly close for it, obviously strong. Again, had a bit of a sell-off, bulled through that level. Could it end up being a bearish candle? It could if it goes bad next week, but for now it's just bullish. There's no real reason to say it isn't, and that's the same on semiconductors as well. They've been doing pretty well. VO versus SPY, not much movement here in the small cap or the middle caps, but if you have a look here at IWM, it actually outperformed this week. So small caps outperformed the big SPY, and that means that we start to see a bit of rotation. You can see here the weekly 20 holding this low. So we start to break out past like a 0.365 as a ratio here. It could mean small caps are ready to go ballistic. What about Chinese stocks? They're still 2 steps forward, 1 step back. No real changes here. Looking for a 25,000 plus close to get liquidity back into that. And the US 2K has not quite hit 2281. Now, one of the reasons we like this level is because think about it. If we hit like a trend line on this SPY, and at the same time we hit a supply on the Russell 2000, that's like a confirmation or a correlation across the board of different pairs all hitting at the same time. And you guys know I actually like cross correlation. So I like to see maybe commodities hitting something at the same time as we see crypto hitting something at the same time as we say the S&P 500 and others hitting stuff. So when that happens, cross correlation tends to occur. And this leads into, of course, usually better kind of, we guess, trades and confirmation. Have a look here at semis just for a second. All-time highs. So yeah, did semis come back? That's one of the better trades I've seen. Semiconductors, it's up 66% very quickly here. And a lot of these hypergrowth stocks, some of them are up like 150% since just a few months ago. So certainly the bull and the animal spirits are alive and well, although maybe they will ultimately be misguided. When we have a look at the NASDAQ, it's the same thing. So NASDAQ also hitting into those highs. And whenever you're looking at cross correlation, obviously you can do a quick NASDAQ run and you'll notice, oops, we stuffed that up. There we go. We'll do this live. Here we go. And you can see that we've got a very, very nice kind of high level as well coming off those previous highs. So this is going to be a trend line that I think a lot of people will have on their charts. And we've squeezed out the shorts that are in here. And we're currently on the way up to FOMO train. So certainly the first trend line we'll use on this channel for a little while, just because I think it's a pretty key level to, of course, be watching. Ethereum managed to get through the most traded zone to the upside, never converted to a short, interestingly. Was a good area for shorts. You can see would have trapped a lot there, but it's actually rallied through. Not quite through the bulls take control level, but certainly more bullish than bearish. And Bitcoin not quite through the 110 yet, but certainly took that low, hit into this secondary demand. You can see I had bears written here, hit into here, failed, no short through 107.5, which is where I would have expected it to come in, and then it's rallied higher. Yeah, so I still remain bullish on the middle, longer term for Bitcoin. It's one of those 3 pillars for the geopolitical tensions, which kind of remains to be, what we're seeing here, which is a mixture of crypto, mixture of gold, silver, those 3 pillars. The week ahead, we have, of course, the bank holiday here for Friday. So happy 4th of July for all the American viewers. I hope you have a great time with your family, friends, and everything else. And then we come into some actual big news for Australia, cash rate. That's where I'm from. We're going to probably see a cut. I think it was like 90-something% or 100% chance of a rate cut, according to some of the experts. We'll see whether Australia gets another one. And then we go through, and you can see here we have basically a lot of news coming out for different countries. And then we've got FOMC meeting minutes here on Thursday, July 10th. And then, of course, some unemployment claims again. The main thing for the next week, I think, is the tariffs. So the 9th of July is when that kind of runs out. And as we saw, it's going to be a bunch of tweets and all sorts of things. So get ready for another wild week, guys. Make sure to subscribe to the channel if you enjoy it. And of course, if you're interested in finding out a little bit more about some of the courses we have, some of the ways that we've picked some of these pairs, particularly things like gold, silver, Bitcoin, and where we're at in terms of cycle analysis. Definitely check out our advanced course. 4th of July special on right now. I think it runs out in like 24 hours, so definitely check that out. Otherwise, it was great to see so many of you at our Melbourne event. That was awesome. And yeah, we hope to come around the world and meet so many of you guys. You are the best, I'm telling you. Our community is filled with some big brain individuals. So if that's one of you, which of course it is, thank you so much for watching. Smash the subscribe, hit the alert bell, and we'll see you in the next one. Bye for now, everybody.